you very much. And I'll start, if I may, with a story. The founders of Funding Circle, actually, three chaps. They were sitting in a pub back in 2008, and they were pondering the question, why is it that the biggest international companies around the world can raise finance cheaply, quickly, efficiently via the bond markets, whereas smaller companies, high street companies, have to go to their bank and it's expensive and there's limited choice? Now I know what you're thinking, this is the worst pub chat ever, but it was what caused Funding Circle to come into existence. Funding Circle, as a UK startup, is now facilitating over £40 million worth of lending a month to SMEs in the UK, and we also operate in the US now. So today, very briefly, we'll be looking at alternative finance in its many guises, how Funding Circle fits into that whole ecosystem, and then our view on the future of finance, particularly for SMEs. So, to answer the question, what is alternative finance, I think it's important to look at the background to this whole alternative finance revolution. So, what is the status quo? What is the traditional lending market? Now, traditionally, it's been dominated by the big four or big five financial institutions, with up to 85% of the market share. Now, as a result of that, according to this Breeden report, there's now going to be a funding gap of up to £191 billion that's going to accumulate between 2012 and 2017. But why has this gap come about? Now, some interesting statistics from BIS that were released towards the back end of last year. And these statistics, this research, found that 71% of SMEs looking for funding only go to one provider, and in the majority of the time it's their main bank. Worryingly, 37% of SMEs actually stop looking for finance after that initial rejection. So they cancel their expansion plans and they just assume that they're not going to get funded. Now, the root cause of these negative statistics have been attributed to a decreased appetite for lending, the increased provision that traditional high street banks have to make for regulatory fines, therefore reducing the profit margin that they can make on the smaller loans, a lack of education within the SME market as to alternatives, and then also the worry around if I'm a small business, by shopping around for different types of finance, am I going to negatively impact on my credit score? So with this traditional finance model failing SMEs, a number of alternative providers came into the space to try and address that, essentially looking to take financing back to its fundamentals. Peer-to-peer, crowdfunding, marketplace lending, all essentially do the same thing. They connect lenders looking for a rate of return with borrowers looking to borrow. They do this for a variety of mediums, a variety of platforms, and a variety of technologies. What has become apparent is by the use of this technology to communicate in a very clear, transparent, yet detailed manner between the investors and the borrowers, we're able to build trust so that capital flows between them. No longer do you need to have a 10-year relationship with a bank manager for them to trust you enough to lend you the money. Our various counterparts used electronically available information from Experian, Companies House, Facebook, a whole host of online services, including platforms like Sage and Xero and all of these online tools that allow credit providing institutions to get a really good snapshot of that business, really understand how it's working in, again, a very transparent way, and therefore they're able to decision whether or not they give that credit in a very quick and accurate way. Tied to this latter point, a lot of organizations now won't either need security or they will simply provide the finance based on point of sale statistics from small businesses. They don't even need to produce accounts or a huge amount of MI. Just having a card reader in your shop will allow you to raise finance off the back of that. So how does Funding Circle fit into this picture? Well, Funding Circle is probably the closest alternative finance provider to a typical bank loan. We provide debt finance on a term basis of 6 months to 5 years. We were founded in 2010, so still relatively new. But since 2010, we've grown to over 200 staff in the UK, over 100 staff in the US. We're authorised and regulated by the FCA. We won Best Lender last year, 2013 and 2012. And as of Q4 last year, we were actually the 5th largest net lender in the whole UK. We also have a huge number of venture capital organisations backing us with huge amounts of experience and great connections as well. So you've got DST Global there, BlackRock, Sands Capital. So the Funding Circle business model is based on those founding principles discussed in the pub back in 2008. How do we connect lenders and borrowers in an efficient and transparent way? So the Funding Circle marketplace actually allows a whole variety of lenders to participate in loans that traditionally they wouldn't have been able to, because as an individual, I don't have any experience of underwriting. I don't have any experience of payments processing. I don't have any experience of collections and recoveries. Similarly, we now work with local authorities who are investing money on the platform just in local businesses within their local area. It's a very efficient way of a local authority stimulating growth within their local area with exactly the same fees being charged to the local authority as are charged to individual lenders. So it's a great way of facilitating that. Banks such as the British Business Bank also lend on the platform, and we have a number of equity funds, sovereign wealth funds who participate from an institutional perspective. As I've put here, we've now lent over $1 billion. Sounds better in dollars. It's about 620 million pounds, but we are also lending in the US. And we've helped over 8,000 businesses grow, and we are now starting to see those businesses coming back to us for their second, third, fourth loan. The average loan size through Funding Circle is £60,000 across all sectors for almost any purpose. On average, the business has been trading for 8 years. So we don't provide startup loans, unfortunately, although it's something we're looking to do, because essentially we have to balance the returns for the investors as well. So although this is alternative finance in the sense of we are helping provide finance to small businesses that need it, we're also having another positive benefit on the UK economy in the fact that individuals are now getting a return of, at the moment, on average, 6.8% on their investments. That's including, that's after the fees they pay to us and after making provisions for bad debt. So it's actually an excellent savings tool. Another great impact is that Nesta did some research on us, and on average, a Funding Circle borrower employs 2.8 more people following a Funding Circle loan. So it sounds simple, and it's working, but really the hard work is going on in the background. We've got a very sophisticated homegrown credit model that does all the legwork, and essentially we look at very similar information to a high street bank. So again, it goes to the point of we're not a startup lender and we're not a subprime lender. We will look at all of these metrics, the same metrics that a bank would look at, but just in a more streamlined and efficient way. So we don't have any legacy problems with regard to old software or old processes that a lot of the traditional lenders have. And also we only provide debt finance to small businesses. We don't have to have structures in place to provide any other type of service. This means that we can get a decision back to that borrower within 48 hours. Compare that to a bank loan, you could be waiting 4, 5, 6 weeks. Typically, the borrowers can get access to those funds within 7 days. Another example of the innovation on the platform is that we've created a thing called a boundary model to address one of the problems that was highlighted in the BIS report. So the problem is shopping around for finance. By looking at alternative finance, am I going to negatively affect our credit score? So here at Funding Circle, we actually produced a thing called a boundary model. We looked at every single business in the UK, and we've pre-checked them using some very simple metrics to say, on the face of things, would you be eligible for our type of finance? And that allows a business to go on a website and within 30 seconds know with a 70% probability whether or not they would be able to get approved for a loan through us. So it's a great way of minimizing that risk of negatively affecting their credit scores and also very quickly determining if this is the right finance for the business. to speak more to the experience of the borrower, they have just one point of contact throughout the entire life cycle of the loan. It can be funded in as little as 7 days. And actually, there's a whole suite of softer benefits that actually we didn't anticipate having as much of an impact as they did. So one of the biggest things that we learnt was how little self-belief entrepreneurs have in their ideas. Sometimes this crippling self-doubt, am I doing the right thing, can have a really big impact on the direction of the business. Imagine now if you're being given £60,000 by 2,000 people who are essentially saying, I believe in what you're doing, here, have my money. It gives a huge boost to that entrepreneur and gives them the confidence to go on expanding. Also, a great case study, more recently a borrower was building eco-homes on the south coast, and they got a development loan from us here at Funding Circle. And by engaging with the 2,500 investors that provided that money, we arranged for some of those investors to go down to those eco-homes whilst they were being built. And off the back of that, 3 of those investors went on to buy homes that developer had built. So a great kind of positive cycle to the whole process. Now, another example, onto the sort of mandatory video here. This is one of our borrowers quite early on in the life cycle of Funding Circle, so back in 2012. But it's a great example because this is an example of a business that went from a bricks and mortar business to an online business and needed a relatively small amount of money to continue growing. So let's see if this works.
Sensible Supplies is a place to come to get a really good deal. I started in packaging and now I sell sweets, other catering supplies, party supplies, fancy dress products. If we sell it, you'll be hard pressed to find anybody else doing it at a better price. I come from a family where they've all worked for themselves. Whenever I've been doing something for myself, even if it's been buying junk from auctions and selling it at a car boot sale, because you know you're going to directly prosper from the hard work you put in, you'll always go the extra bit. I had a friend who was in the holistic scene. She had a shop in Birmingham. I saw the money she was making out of it, so I thought I'd give it a whirl in Nottingham. Rented a shop in town. It did okay, but I'm always trying to strive to do a bit more than I'm already doing. And that's when I discovered eBay. I put some candles on there and some magic crystals, selling a lot more over this eBay place I found than I was in the actual shop. It was quick becoming obvious that that was the way forward. And after about a month of doing that, I stopped going to the shop altogether. Month on month on month, I've seen about a 5% increase every month since 2010. And it's gone from my house to now 10,000 square foot of warehouse space that I now occupy, and ever growing. A couple of months ago, I had a telephone call from a company called Groupon, and they'd seen me selling Haribo sweets, and they wanted to see if I would fulfill orders for them. But to get my foot in the door, it required me to have on hand 10,000 units. The attitude of the bank was more annoying than anything. I spoke to my accountant and he said that he'd heard of a place called Funding Circle where a bunch of people all get together and give you the money as a collective, and maybe I should try that. And I did, and I got the money, and I got the stock, and I sold it all in about 3 hours, and I made a fortune off it. With Funding Circle, I immediately got a better feeling about the whole thing just from the way the setup works. To think that other people are going to benefit from it, that's great. I'm in a unique position where when everybody says to me, how's it going, I'm always like, I'm too busy. I've got too much work, I've got too many contracts to fulfill. It's always a good place to be in. Everything moves at this time of year. Parties, because everyone has been parties, so everything, paper plates, napkins, hats, this, that and the other. Fancy dress, obviously, you got Halloween, and you got New Year's Eve and Christmas, great time for that kind of stuff. We've applied for an alcohol license. We are looking at selling general groceries. Basically, if it sells, I'll buy it and I'll sell it.
Okay, so thank you, Sensible Supplies. Good example. Also, the accountant there referring him over, and it's only through building trust in these businesses' advisors that really this kind of financing is going to gain traction. Now, I mean, just on that, the marketplace lending model can work well and has proven itself to work well. So well, in fact, that the alternative finance market grew by over 168% from 2013 to 2014. That's just here in the UK. Across Europe, it accounts for nearly €3 billion worth of lending just in 2014. Note also that the UK is really leading the pack across Europe with alternative finance, both in terms of growth and the total volume that we're doing. Compared to the average across the rest of Europe, we are, 3 or 4 times further down the line, which is great. So believe it or not, coming quite close to the end of the session so far. So quick recap. I mean, we've looked very briefly at the pre-existing conditions to what's brought about these sorts of businesses coming to market. The pre-existing conditions being 4 or 5 main institutions that, to be honest, when those institutions don't work, the whole economy doesn't work. So there has to be some extra capacity there. How out of this environment alternative methodologies have come in to allow the flow of capital to be more efficient and more transparent. How and the Funding Circle is one of those platforms. Do we think it's the future of finance? Well, I certainly believe so. Having just passed the $1 billion origination mark, we're predicted to do £600 million worth of origination in the next 12 months, and we can see that this is a pattern that is evolving in every single country in the world, that this gap in financing is the same pretty much wherever you go. So where do we think the marketplace model of business will take us? Well, we do believe that on a global level we can facilitate the flow of capital, irrespective of geography, irrespective of business size, irrespective of loan size and loan rate. And in doing so, we're going to provide better returns for investors. Now, this might seem like lofty ambitions for a business that actually holds no capital on its balance sheet. We don't lend any of our own money. But I basically nicked a little meme that was going around LinkedIn a few weeks ago. The world's largest taxi company owns no taxis. They just connect drivers with people that need a lift. The world's biggest accommodation provider owns no accommodation. It just connects people looking to stay with people that have got spare beds. And the world's biggest media channel creates none of its own media. It just connects people creating the media with those looking to consume the media. So that's where we see ourselves fitting. Thank you very much indeed. And visit fundingcircle.com, either as an investor or borrower, and there's loads more information on there. Great. Thank you.